Welcome to another episode of Just Business Talk, where we talk about business and entrepreneurship and merger acquisition. So, our today's guest is someone who knows how to get the deal done and through the line. So, we have got Caleb Basile with us, down to earth CPA, who's been helping businesses to verify the quality of earning. His company name is QOE Prep, which stands for Quality of Earning Prep, which is a great name, by the way. If you ever thought about buying a business, or even you're just curious about what really goes behind the scene, this one for you. So, Caleb, thank you so much for joining Just Business Talk today. And
Thanks
I
so much,
really,
Tahir.
yeah. Yeah, so it's my pleasure to have you here today, Caleb. So let's start with the idea of QOE Prep. It's a very unique name. So how did you get that idea to start this unique service? And the name itself says it all.
Yeah, I really appreciate that about the name. I thought about it a lot, so it's nice to hear someone saying that. And the
Yeah,
logo, believe it or not, makes a Q, an O, and an E as well in
right.
the little logo.
Mhm.
So I thought of the name because originally, when I left Baker Tilly, I wanted to help people prepare the quality of earnings, and
Hmm.
so that the transaction advisory teams they could use it to kind of
Hmm.
to finish the report and sell it and give it to the clients. I
Hmm.
wanted to work in Excel. I didn't want to be in meetings, and I didn't really want to sell reports at all.
Right.
A few years later, I decided, you know what? They're paying me a good amount to do this, but they're also white labeling my work and taking all the credit. And I saw a lot of firms grow really fast using my work, and they were able
Hmm.
to upsell services like monthly bookkeeping, monthly CFO services. So I decided it's time for me to go off on my own and start preparing my own quality of earnings for clients.
Hmm.
So I started doing my own quality of earnings for clients, and the feedback has been really, really good. And that's how it started. QOE
Okay.
Prep. So now,
So
I guess the name.
yeah, so you decided to call it quality earning. Why not financial due diligence? I mean, what's the difference between a financial due diligence and quality of earning? Can you define that difference?
Yeah. So uh, a quality of earnings is a very thorough financial due diligence. There's a lot of different types of financial due diligences. Like you can look at the variance analysis from year to year, like how is a company's revenue trending? That could be a part of your financial due diligence. A quality of earnings involves a lot of aspects that we're looking at. We're comparing the bank statements to the financial statements,
Hmm.
the financial statements to the tax statements, the payroll reports to the payroll accounts. And that's just one piece of the quality of earnings. That's what we call the reconciliations. Those essentially tell you, are the numbers essentially accurate? Like, do they line
Hmm.
up with each other? The banks, the financial statements, the tax reports.
Hmm. Right.
Um, yeah.
Okay. So quality of earning is a detailed analysis of a financial due diligence. Am I right? Or you just do the analysis of the profit and loss, or you also check the balance sheet as well?
Yeah, it's a lot more detailed. And then, but the big piece why people pay me to do a quality of earnings, especially on the buy side, is to determine the add backs. So first of all,
Hmm.
we want to know what reported EBITDA is. We look at the seller's SIM and compare it to what we find as reported EBITDA, and typically they line up. And then we look at all the sellers' add backs to EBITDA. An add back can be a one-time expense that's not going to be going on to the next buyer.
Hmm.
Personal expenses going through the business that the buyer's not going to have. Old offices that are no longer being in use, they'll add them back and
Hmm.
make the EBITDA number go up. And that's typically what happens when you see someone getting ready to sell their company. What I do on the buy side due diligence, and I do both the buy side financial due diligence or quality ratings, and the sell side financial due diligence or quality ratings. On the buy side, I'll look into each of their add backs and I'll either accept them, deny them, or recalculate them. And then I'll bring in my own add backs that a buyer needs to be aware of. And those add backs will actually bring the adjusted EBITDA numbers back down and make it a little bit more reasonable for the buyer. It's in our nature as business owners to value our company higher than what a buyer is going to value it as. So I want to present a reasonable amount for both the buyers and the sellers to agree upon.
Okay. So how often your report is a deal breaker?
I don't say that my report is the deal breaker. Like I've been told by one of my clients, Caleb, you're the most pessimistic person on my deal team. And I'm like, it's not my fault. I'm just telling you what the numbers tell me. The sellers and the seller's investment bank or the seller's broker told you higher numbers.
Yeah.
But I'm telling you what the numbers are actually telling me.
Yeah.
So I'm not here to kill a deal. I'm here to help you verify that the company you're about to buy is going to pay you back.
But I think your report is actually in many deals, which I don't know if it's true or not. After your report, the deal, there's much more confidence in the deal by the buyer. So buyer would be more committed to go in the completion line. That if and but thing would go away because they're more confident that the quality of earning has been verified. Because that's the biggest fear of a buyer when they acquire.
Correct. Yeah. So a buyer's always going to do the quality of earnings.
They get more motivation, and then they might end up not reducing the price or negotiating or renegotiating the price or willing to pay some extra multiple because the profits are verified.
Right.
EBITDA that needs verified. Yeah. So
essentially 100% of the time, a buyer will do a quality of earnings or some form of financial due diligence. The sellers don't always do it. However, I strongly encourage a seller to do a quality of earnings themselves so that they are aware of what a buyer is going to challenge them on.
Yeah, so that's what I was going to ask you, that on the sell side, how do you do? So basically, sellers, they do all their own self quality of earning on their own business, is that? Like they're doing the audit, basically. It's another word of auditing.
Yeah, so my theory is I want to present a sell-side quality of earnings report that's going to give the buyer confidence and eliminate big questions from the buy-side due diligence when they're under scrutiny. Because I want my numbers to stand up against the scrutiny of the buyers, because that's going to make the deal go a lot smoother. Most of the time when a deal dies, as you're saying, it's because of the financial due diligence or the quality ratings. It's really not always because of the legal. It's not because of the market. It's because of the financial due diligence, and the numbers just aren't lining up.
Yeah.
So I want to help eliminate the deal from dying by doing a good sell-side quality of earnings report that's going to have reasonable add backs. It's going to have very well organized numbers for the buyers to follow, and it's going to get more buyers interested because they can see that the sellers have done a lot of work to sell their company. It's like selling a house. If you clean the rugs, if you wash the house, if you fix all the lighting, make everything look good, you're going to sell your house a little quicker than if you leave your house messy and show it all to all these people to buy.
Okay. And so typically you come in the picture post LOI. Once the LOI is signed or term sheet is agreed, that's when you get into the picture.
Correct. Yeah. So for the buy side QV, it's always post LOI. Yeah. For a sell side QV, it's when the seller's thinking about getting ready to sell, or when an investment banker will bring me in to get the seller ready.
Great, amazing. And typically, when you start working on a buy side mandate, so what documents do you request from a seller to send it to you or share in so what's your typical process of working with the seller?
There's around 20 to 30 documents I'm going to want to see, but I break it down in 5 categories. The accounting, the financial accounting system that they use, so QuickBooks or Sage or any accounting system they use. The bank statements, the tax reports, the payroll reports, and then the seller SIM and the LOI. I want to see all that stuff. And then there's a whole lot more stuff I ask depending on the industry, but it'd
Yeah.
be hard to get into all the specifics.
Okay. And how deep do you get into in the backdated? How many years of data do you
It's
take
3 years
out?
plus TTM. So I'm going back to 2022 and I'm doing 23 and 24 and then up to, it'll be May of 2025. Sometimes a client will ask for 5 years, 6 years. They want to see how they did business over COVID. So they'll say 2019 to 2025. That costs a little bit more,
Hmm.
but it gives the
Okay, so
buyers more
3 years is
confidence.
your typical
Yeah.
time you ask every seller.
Yep. Yeah, it's
Uh,
what banks require, so that's what I go off of. But if someone asks for more years, I can do more years. It doesn't.
is your quality of earning reports are acceptable in the bank for SBA loans?
Yes.
Okay, it's accepted by all the banks and stuff.
Yep. Yeah, I've
So,
never had a problem with it. Typically, a bank is going to do their own conservative due diligence for based off the taxes. So I'm not really there. My client's not the bank. My client is the buyer who pays me.
hmm, yeah.
And it's the report's really for them to get extra comfort. However, there's something that when carve outs occur, which is that essentially you're buying, if there's two parts of a company, you're only buying one of the two parts. I'll go in and I'll help analyze the revenue of the carve out and the expenses of the carve out and what the income is of the carve out. And that is something a bank will accept because they can't go off taxes to produce a loan amount. They have to go off of the financial statements from the carve out, which is something I prepare.
Hmm. Right. Okay. And can you tell me, like, any deal you worked on where everything looked perfect and your quality of, I'm sure that there would be many, but your quality of earning report has changed you know, the decision, or you found a big gap between what seller has disclosed and what actual finding were.
Yeah. So I had a deal where the sellers were saying that payroll expenses were going to go down
Hmm.
from 50% down to 30%. And then they did
Okay.
multiple ad backs
Right.
saying how payrolls are just going down because they won't need this employee, they don't need these contractors, this line of service is no longer going on. So it ended up getting payroll from 50% to 30%. And
Hmm.
I went back to them and I said, that's not reasonable. You never had less than 40% of all your revenue be in payroll. So we're going to
Hmm.
have to we'll give you some credit for your ad back, but not as much.
Hmm.
And that ended up helping my buyer save 20% on the company.
Hmm. Right. Okay. And then what happened with that deal?
The buyer bought it for 20% less.
20%. They still go through it.
Yeah.
Right.
Yeah. It still went
Okay.
through.
Okay, that's good. And you generally, you get a lot of business from business brokers or buyers. They find you directly. How do you get your clients?
Buy side will be buyers finding me directly, or they'll hear about me in network on like Search Funder or LinkedIn, or if they're like on ChatGPT, they'll find me.
Hmm.
Sell side will be from investment bankers and brokers as well.
Yeah. So basically, I think that I was really smart how you positioned yourself. I mean, general CPA, yes, I'm sure they can also do the same what you do, but you kind of narrow down the niche of people who want to acquire a business, the
Hmm.
quality of earning prep. So I think this is very easy for even ChatGPT now to basically narrow you down and say, hey, this is your guy. You better speak to that guy.
Yeah, ChatGPT has been very nice to me because they don't care about how long you've been on the internet. Google does care. So if you're a new
Yeah.
company, I switched I was a CPABasile.com. Now I'm
Mhm.
QOE Prep.com. And when that switched, my rankings in Google dropped from like the third page. Now I'm on like the 10th page.
Mhm.
But ChatGPT doesn't care about time. So they still send me a lot of work.
Yeah, they give you the specific results.
Yep,
They
they
give
do.
the specific, and many people are now switching to from Google to ChatGPT to find
Yep, for
answers or
search.
even searching. Yeah, it's the same. We also get. many leads from ChatGPT now. So I was coming to the AI. So how do you think the AI is going to change your job? Right? Do you feel threatened by AI that maybe the AI will take your job in the next couple of years?
It's a good question. I mean, it speeds up a lot of stuff in the sense that like you can go to a meeting and you have an AI note taker, so no one needs to take notes, and you can look back on everything. A lot of my reports are done in Excel, and I have good formulas and templates for that, so I don't have to update too much when I work on it. I just have to analyze everything. Um, so yeah, I could see AI. I mean, I'm sure in a lot of transaction advisory firms, like they can now do more work with less people, so that takes people's job away. Um,
So
yeah,
basically, one person can do the same job what five people were doing before, let's
yeah,
say. Yeah.
yeah. I mean, it's like any change, like the
Mm.
calculator. Ideally, we should all be good at math. We're not.
Yeah.
Everyone has a calculator in their pocket,
Yeah.
but people don't understand numbers. Poverty still exists. People still spend more than they earn, even if they're making a good amount of money. So just
Mm.
because there's a tool doesn't mean it's going to be used.
Yeah. But what I see is in your job a lot of good use cases of AI. I mean, the the deal is at the stage of financial due diligence or quality of earning preparation. You trigger the AI, software or whatever. AI will reach to the seller, request a set of information or data as you do personally. Seller feeds the information. AI do the analysis and output with the
Hmm.
report with the all the things. So I mean,
Yeah.
I can see that because I'm a big advocate and I work with AI. I use AI on all my systems.
Yep.
I run a very large brokerage company, 60% run by AI agents.
Wow.
Almost 60% of my workforce is AI agent. In the last 3 months alone, I've replaced 6 people with AI agents. So I
Wow.
can go much faster now. So I can see the use cases in accounting and yeah,
Hmm.
you would still need people, but as the AI would evolve and more specialized tool come in the market to take care of the accounting part of it, yes, it's definitely gonna
Hmm.
assist you to do the job faster.
Yeah. Yeah. From what I've heard, AI is amazing for written word and like it's an LLM. Like it's good at writing. As far
Mm.
as math, it's not the strongest yet,
Yeah,
but I hear that it's improving.
yeah, it would. Anyway, how long you been doing this?
I've been in accounting, so audit, tax, CFO for 10 years, but then I've been in quality of earnings with transactions for 5 years.
Yeah,
And I've done
and
200 deals.
okay. So where do you see the trends of small, medium business sales is going in US? So mainly you work in US, right? Only for US based
Yeah.
clients.
So I mean, I've done international deals, but right now the big thing is like accounting firms. Like people want to
Hmm.
buy accounting firms a lot because of the recurring revenue. It's boring work. It's easy. It's very fragmented. And then there's also on the opposite end of the spectrum, there's the trades, plumbing, heating, electricians. Like people are flocking to them because the idea is that AI won't replace them as easily.
Yeah. So where do you see the market is heading to in terms of is it the market? There are more transactions. There is a market growth.
I So I see it as more transactions because people are aware that they could sell their company, and because it's less likely that a son or a daughter will take over their father or mother's business nowadays because
Mm.
people just move around USA a lot, and
Mm.
people have their own passions, their own desires, and like there used to be where there was like I don't know maybe 10 jobs in the world that you could do. Like you could be a farmer, a fisher, you can make clothes. Like there wasn't too many jobs, and now there's like
Yeah.
thousands of jobs. So you can pick what you want now. So because of that, I think it's more likely that there's going to be more businesses selling.
Yeah, I absolutely agree. And also there's a element of baby boomers. Everybody's talking about, the
Exactly.
retiring owners and But do you think there are enough buyers in the market for the same rate? So many
So
young people want to buy these businesses.
I've heard that there's a rule of thumb of 30 buyers for every seller, at least in the small businesses, SBA business size, so business under 5 million. I don't know if that's accurate at all.
Hmm.
It's hard to tell.
Yeah.
I would think that with the SBA changes making there be less buyers, then maybe there are too many buyers in total right now because they try to make it
Hmm.
less buyers that the people that do get the loans, they're a little bit more qualified.
No, in my system, in my database, there are 80 buyers every listing we got, but
80.
80, yeah. Because we're in Dubai, mainly our buyers are
Wow.
and there's a lot. Market is hot right now. Everybody from the world, around the world, they want to come in Dubai and settle in here. So it's a big, yeah, it's a buyer's market.
That's amazing.
Yeah, yeah.
That's yeah, you got to pay it. So that drives up the value of businesses because
Yes, it does.
you're
Yeah, yeah.
competing with more
So,
people.
and it's a cash market majority. Like there's no
Yeah.
SPA, so the buyer has to find money to fund the
Mm.
deal. And the majority of your deals are through SPA, right?
No, so I mean, I do mid market as well. I'll do businesses up to 100 million in revenue. So some
Right.
of it's just from external investors, but yeah, you're right. The majority of the small deals are going to be SBA loans.
Okay. And how do you charge the fee? I mean, is it percentage of the deal, or you have a fixed fee structure? How you fix
Fixed
it?
fee, fixed fee. It's going to be
Fixed fee.
more the bigger the revenue. The bigger the company, the more I charge.
So you do your fixed pay based on the revenue or EBITDA?
Revenue.
Revenue. Okay. All right. And then how long do you take once
This is where
going
I
out to
win
the, yeah,
compared to my competitors. I do it in 2 weeks.
2 weeks after
Yeah.
you receive all the data from seller?
Yes. Yeah.
Okay. But if the seller is, delaying or stuff, then it's not counted, right? In the
There's
fee.
nothing we can do if the seller's delaying.
Yeah. So typically the process is once the buyer signs you up, you send a list of documents, or do you set up a data room, or you work on an existing
Yes.
data room?
Yeah. If they have one, I'll go off of them. It just makes it easier for everybody. If they don't have one, I'll set one up.
Okay. Okay. They'll upload the documents, and client can be anywhere, so you don't need to go and physically visit
Correct.
the business. So it could be any
Yep.
brick and mortar restaurant, any business.
Yes. Any business.
Right. Okay. That's good. That's amazing work too. So that's how now. I mean, this was not possible. I think 5 6 years ago before COVID, is it?
No.
It has to be a
Well, I mean, I
local
guess
client.
the technology was there. It just people didn't do it. I
Yeah.
mean, everyone
So
had emails back then. This probably could
yeah,
have been happening for 20 years, but no one really did it.
so if it's a local restaurant, so you only hire a local CPA or accountant who would go and visit
Yes.
the restaurant. He'll visit, take the
Yep.
files and check the files, and then
Yes.
prepare the report.
I
But I
remember
think,
auditing. I would
yeah.
audit companies in person, looking at papers. I'm like, why are we doing this? This should be done online. And then,
Yeah, I know. So, I mean, COVID has really changed things,
it
how we
has
do
changed a
things
lot.
today.
Yeah.
I mean, what we're doing today, this podcast, before COVID, it was not possible, is it? Right? So,
I mean, as much as I would love to visit Dubai, I probably wouldn't be spending all the money to talk with you. But no, I'm glad we had the opportunity to
yeah.
discuss.
I'm reading that book. I mean, this is a very nice book. I recommend everybody to read, called One Man Unicorn. So
Hmm.
available on Amazon. The author was in my podcast also, talking about he believes in next 5 years or 10 years max, it is possible for one man to build $1 billion company. There will
Yeah,
be
I
many
see
one
it.
man unicorns, like one person working with bunch of AI agents and building $1 billion
Yeah,
business. And he actually, shows you all the tools and ways and ideas and
yeah,
stuff. And I think how quickly AI is evolving. Yeah, this would happen one day.
I believe it.
So
I
we
believe it.
will
Yeah,
know that okay, one person is running $1 billion company.
yeah.
Yeah, and it could be in different fields. Right. Okay. So, what advice would you give it to anybody who's listening to this podcast and looking to buy a business? what are the main things they should be uh, look for, should be looking for when they are deciding which business to buy or not?
They need to go to QOEPrep.com. Email me. No, I'm just kidding.
Okay.
I'm
No,
not joking about that. That would help
just,
out a lot.
just a list, a quick.
Yeah, I would say look at customer concentration, which basically
Okay.
says how much revenue is your top 5 customers bringing in. Look
Hmm.
at revenue trends. Is the company's revenue trending up or down? Look at profit margins. Are the profit margins staying strong or are they getting less and less?
Hmm.
Those are the main things that I see kill deals. And then also compare the numbers. Are the financial statements, the tax reports, and the bank statements, is all the income there lining up?
And obviously, in the end, go to QOE.com and get in touch with you.
Yep, QOEprep.com. Yeah, thanks,
Prep.com.
Tahir.
Yeah. And how about the seller? So if someone wants to sell their businesses, so how can they, prepare their business to be well positioned to be acquired?
They just want to make sure that their numbers look good for the buyers. It's like cleaning
Hmm.
your house. You got to make your house look clean. You got to make your numbers look good. And
Hmm.
and buyers get scared if there's a higher customer concentration. So if there is a high customer concentration, they want to get some long-term contracts in place. They want to make sure they have good written documentation for their employees and all their jobs. That eliminates the key employee risk because a key employee, if one key employee holds a lot of the knowledge and the power and they leave, that's a high risk to a buyer. So they don't want to see that at all.
Amazing advice. Thank you, Caleb. Thank you to uh, join our podcast today. I think our discussion was very insightful. So, finally, as you mentioned previously, your website is QOEprep.com. If anybody wants to get in touch with him, go there. And you're on LinkedIn as well. Anybody wants to connect with him on LinkedIn, you can do it. So, if you want to buy a business, I think quality of earning report is highly recommended. Always check what you buy. And if you're a seller who's listening to this podcast today, always make sure prepare for your exit. Do not just wake up one day and then decide that I'm going to sell my business tomorrow. It doesn't work like that. You need to look for prepare yourself, book a call with Khaled, discuss where your business is and how you can prepare. This is going to help you sell your business quickly as well as increase your valuation as well. So this is me, Tahir, signing off from today, and I'll see you in my next episode next week. And thank you, and follow me on YouTube and stay tuned. Thank you.